You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means but one thing. It is Friday. It is the end of the week. It is time to look back on the week that was, and indeed still is, from a while trading and trending and analysis and unusual activity perspective. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which all of you have been mainlining all week long. Hope you're having a good trading week out there, staying profitable, staying safe. The latter more important than ever, it seems like, these days. Of course, if you want to go above and beyond, you want to win pro trading crates, you want to get access to exclusive shows, including one coming up right after this one, so you don't want your broadcast week to end with Volatility Views. You want a little more fun, a little more love, a little more content in your life. You want great pro Q&As, some of the best minds in the world of options and derivatives, and of course, live access to this and everything else that we do out there, early access to some cool stuff, and a whole bunch of other fun goodies. TheOptionsInsider.com/pro is the place to go to learn more about all that fun as we learn who's joining us on the old Vol Views show today. First, let's go out to the Southern Volatility Mecca known as Austin. It's an up-and-comer in the vol space, listeners, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Hey, good to be here. It's the future home of RMC. So best I can tell, this is going to be the epicenter of volatility here in the near future.
Yeah, you're all grown up now. The vol market coming to you must signify something. Something's happening.
Well, they know I'm
Austin.
here.
There you go.
That's why. They said, wait, Sebastian moved to Austin? We got to get Risk Management Conference there.
I will say there was never an RMC before you were there, and now there is one, and you are there. Coincidence? I don't know, but we can at least say there has never been an RMC in Austin when you have not been there. So there we go. Look at those two data points, how you will, listeners, as we are also joined by Joe TIGAY, the portfolio manager over there at Equity Armor Investments. Joe, welcome back to the show. It's been a while since we last chatted. We last chatted with you over a year ago, back in late May of last year. So a little bit's going on in the vol space. How are things over there at Equity Armor these days, sir?
Oh, yeah, things are great. Thanks for having me. It's good to be here. We've had a pretty eventful year in the vol space, I could say. So, yeah, it's been interesting to see what the volatility did last year and how it's performed this year, too.
All right, a lot to unpack, so let's get to it. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down this whole week, including today, from a vol trading and trending and analysis and unusual activity, term structure, all that good stuff cooking in the world of volatility. And coming into the start of the show, listeners, it seemed like we were on pace to just continue this ray of sunshine, this rainbow of optimism that is the equity markets these days. Just nonstop sea of green pretty much all week long. Certainly post CPI from earlier this week. It's just nonstop upside. Everyone and their mother and their brothers, cousins, uncles, cow have to buy this market right now. It seemed like that was continuing today. We were heading into the show looking pretty green. Right as the show is kicking off, we're starting to see that worm turn a little bit, listeners, ever so slightly. The Dow's still up about 1/3%, but the S&P has now swung slightly into the red, mostly unched to slightly red, and the NASDAQ, same deal, flirting with unched to slightly red as well. So will the worm turn? We are still north of 4,500 in the S&P as we're kicking off the show, listeners. Will we end the day north of that? Will we end the day south of that? I mean, we have rallied about 100 handles in the S&P just pretty much over the span of this past week. So there's a lot of upside baked into this market already. Intriguing to see how this holds on out here, but we shall see. The day is young. The show is young. So, of course, with this kind of mixed market coming into the start of the show, we're seeing vol mostly down, but not down a ton. I mean, after all, VIX. How much lower can we go before we start getting into 2017 territory, listeners? Not quite there yet, but not that far away either. At about 13.5 when we kicked off the show. That's down about exactly a point from where we were this time last week. It seems like VIX has kind of been firming up around that 13.5 level. It'll dip below it, of course, and it's flirted below it earlier this week, but not too far. Then it seems like it kind of rallies back and kind of hangs out at that 13.5 level. So all those downside VIX puts you got at maybe the 13 strike and 12 strike, at least for now. They were looking good, let's say, coming into the start of the week, and then not so much. But we shall see. We shall see. VVIX, of course, also remaining frothy, which is kind of interesting, at about a 97, up 3 points from where it was this time last week. So still flirting with triple digits out there. Whenever vol is getting frothy out there, always makes sense to keep the antennae up and pay attention to what's going on out there, listeners. And VOLQ, a.k.a. the at-the-money vol of the NASDAQ, at about an 18 even when we kicked off the show. That's down slightly, about 1/3 of a point out there. It's not a heck of a lot of evolution in NASDAQ vol since last week, but a lot to unpack. As I mentioned at the start of the show, Joe, you haven't joined us in over a year, so a lot's happened then. Really quickly at the outset there, if you want to maybe opine a little bit on the vol trends we've seen since your last appearance, by all means have at it. Then, of course, we're looking at another crazy week out there, post-CPI. Everyone's leaning towards what the Fed's going to do. What's catching your eye out in the vol market this week as well, sir?
Yeah, there's been a long time. There's been a lot of trends going on. I would say the second half of 22, the obvious trend was the market was lower and volatility was lower. So that was for 2 whole quarters. We saw that really since March of 22. That was the narrative where we get new lows in the S&P. We didn't get new highs in the VIX. So that was interesting to see. And maybe it comes as no surprise. We turned the calendar in this year and it was just off to the races. So the markets had an incredible start. Some of the worst stocks in 22 off to a great start, but mostly just the largest companies, the magmas of the world, the Microsoft, Apple, Google, Meta, Amazons are just killing it and just taking the market along for the ride here. And so it's just been the market, those 7 stocks driving the market. The market's been climbing this wall of worry, and maybe just we've turned this quarter into the third quarter. The market is just suddenly shifting this sentiment where, you know, maybe the economic data was good this whole year and the market was good because the data was good, but nobody felt good about it. The data is good again. Maybe when everyone is just coming to a realization that, wow, everything is not as bad as we had feared. We get inflation cooling off. We're not really seeing economic data cool off, which we would expect usually when inflation cools off. So everyone is just wanting to jump on board here. Maybe they're going after the magma right here. And if you look at the last month, we've actually seen retail call volume exploding. Contracts 1 to 10 outpacing outpacing the institutions for the first time in those big names. So they've really been chasing here up at this level, maybe fueling this July little rally we've had here. And finally, I just want to point out, you asked me for some trends. This is really interesting. I think it's due to the call buying. I think obviously it has to do. This happens when you see the VIX at relative lows. The VIX and the S&P has a positive correlation for the past month. That's extremely rare. That means when the market's up, the VIX is up. So I think people are using that. They're chasing calls. They want to buy into this rally by getting calls and buying volatility, expecting for further upside.
Yeah, a lot to unpack there. First off, Magma. Is that where we're going with now? It was Magnificent 7. We also coined them the super, uber, duper sexy 7 here on the show, I think, recently as well. Are you buying into this whole NASDAQ rebalancing here, Joe? Because it seemed like everyone was starting to fade them about a week ago when this news came out. And then, of course, they just completely unwound that this week. And it seems like that's already in the rearview mirror, Joe.
Yeah, that was the case. And then they flipped it. The rumor ahead of the news. I can't really explain it. No one knows exactly what the rebalance calculations will be. So that was a rumor that didn't necessarily play out. I think people just want to own these stocks regardless of what the NASDAQ is going to hold in them. They love those names, and there's good reason for me too, just because there's so many things going for it. The AI craze, I think, is going to benefit them the most because AI is all about data. It's all about technology. Those companies are leaders in both of those spaces. So, and then if there were to be any sort of cash crunch, if there were to be an economic slowdown, if it ever were to materialize, these companies have fantastic balance sheets. They have a lot of cash on hand. They know the next innovators. They know the next unicorns. If there is a slowdown, they're just going to buy them up and add them to their roster.
The AI benefits us all until the robots come knocking in the middle of the night, Joe. Then maybe we're all going to second guess this AI boom we've all been riding here over the span of the last couple of months. Just check out that recent UN AI summit they had. Interesting and or terrifying stuff, depending on your point of view. Speaking of terrifying, Mr. Meatball, sir, I saw you were out there this morning kind of downplaying, fading a little bit of this Q's rally, pointing to how robust VIX and vol remain. So it sounds like you're not buying into all the hype, sir?
Well, I think Joe makes a really wise point about the fact that vol and the underlying are correlating. That's almost always a sign of a near-term top. I think this rebalance has some pretty big ramifications. And what we're seeing, I think, is the computers try to rope everybody in before and riding momentum, trying to squeeze. I think the shorts got a little ahead of themselves last week. Last week was not the time to jump in, but ahead of this event, when you do the math, you're going to see a lot of money forced to sell Microsoft, Apple, Google, Amazon, and NVIDIA, in particular out of the NASDAQ. And what's interesting is the S&P 500 is not rebalancing. So what is the ramifications of those names going from 50% of the Qs to 38% of the Qs have on the S&P 500? In theory, on a rebalance, the Q shouldn't move very much, but the broader markets will. And I think that this I think that you're going to the force selling buying. I love that they're upgrading these names ahead of what is going to be the biggest force selling that I think we've of mega cap maybe ever. And all you have to do is wait a week and a half, then upgrade your names, and then you look like a genius. Just shows you that these guys maybe aren't as great at timing at seeing what's going on, right? Like I'm not arguing that NVIDIA can't go to 600. But what I would do is wait a week, see what happens with the with this rebalance, see how far these names do get clipped, and then put my upgrade out, and I'd look like a genius. I do think that there's some ramifications here with this rebalance for the S&P 500. That's why you've seen this positive correlation. This frothiness, and doing the math on how much could be sold Friday afternoon when the rebalance takes place, right? So active managers can get out front of the rebalance. I think that's maybe what we saw last week. But the passive funds cannot do anything until Friday afternoon. They have to track the index. So what does the 3:45 to 4:15 Eastern time in the S&P 500 look like, and what does Monday's open look like? Because you're going to see the names that make up 28% of the S&P 500 be basically forced sold. Back of the envelope, I've got some ideas of what it could do, but I do think that this is being overlooked by, and the fact that retail traders are stepping in and buying this is a little scary to me, because I think they're buying the top, at least near term. Long term, probably fine. But if I'm looking at this market and I'm not sure what's going to happen with this rebalance, and I'm in like a tax deferred investment account, I'd be taking my dollars today. I'm going to wait until a week from Monday, and then I'll make a decision. I'll put my dollars back to work. The downside risk here is maybe 5%. The upside is maybe 1%. The risk reward to sit in cash and eat some popcorn and see what happens, I think is pretty compelling.
That popcorn, quite tasty. Can't argue against that at the end of the day. Those analysts. What a surprise. Analysts could get something wrong, sir. You know our viewpoints here on analysts on the network. Instead, let's keep on rolling here. Let's keep rolling out to the land of the volatility surface this week, listeners. And the curve continuing to come in a little bit. That front portion coming in a little bit more aggressively. July, when we kicked off the show, down almost, not quite 2 points, about 1.6 points in that front portion there. AUG down about almost 0.75 of a point. So that front portion coming in pretty aggressively. Again, July going the way of the dodo pretty soon, so no surprise there. Looking out across the breadth of the term structure, you go all the way out to pretty much March of next year before you find a 20 handle out there. Even then, it's only about 2010 when we kicked off the show. So not a heck of a lot of upside north of the 20 handle to be found left out there in the vol surface. Just a sign of the times of where we are right now in the vol space. Even though you look at that July future at about a 14, look at that AUG future at nearly a 16 when we kicked off the show. That's nearly 2 points. It's a pretty wide chasm again there. So intriguing stuff to be found. Will be interesting to see what happens when AUG slots into the pole position. Joe, what are your thoughts out there on, first off, if you have any responses to what Mark was saying out there regarding maybe people getting a little bit ahead of themselves with this rebalancing, have at it. And then B, what are you seeing out there that's catching your eye on the volatility surface, sir?
It's a really good point. That's going to be a lot of forced selling here for all the funds out there that track the NASDAQ. That's a lot of money. There's no question about it. I haven't done the math on this, but I know Elon sold a lot of Tesla, and Tesla has done very well this year. And I think Elon's been selling into it recently. So I think the stocks, if the fundamentals back it up, if the narrative is still there, they can still rally through that big selling. And obviously we have earnings coming up. We're just at the start of it this season, so it could go either way for me. I'm not sold on this is going to have a huge impact, but it should be a very tradable event when it happens, and it should cause some movements in the very short term.
Yeah, I think like I said, I think there's mechanically going to be some selling. Then you can make a decision to go long here. I don't think Joe, I think you agree with me that if you were sitting on money thinking about buying NVIDIA, Google, Microsoft, or any of these names, it's maybe worth waiting until after the rebalance and then making a decision.
I 100% agree. The risk. I think you laid out the risk spot on. The risk, the very short term to the upside is not the same as the very short term and the downside.
And all things rebalance aside, sir, what's catching your eye out there in the vol surface this week, Joe?
Yeah, so you nailed it. The front month got hammered, went down to meet the cash week ahead of expiration. That is often what happens. We have one thing I follow frequently, I think a lot of your listeners will too, is the roll. We went from under $1 to right now we're at $1.90. So, big drop in the front month relative to the second month, which will be which was August will be the front month next Wednesday. So interesting to see how quickly that played out after CPI where volatility, the VIX didn't move much, and the front month future just dropped right onto that cash, right down to where it is.
Mr. Meatball, same question for you, sir. What's catching your eye out there in the ever-shrinking volatility surface, sir?
As Joe said, we've definitely seen July start to converge. We've seen vol pull back, and the July is going to quickly converge with the cash over the next couple of days. There's a really nice spread between the August future and the cash index. So, that's an interesting spot to play. If you think vol is going to stay low, that's both August and September have a lot of juice in them and are interesting levels to potentially play, that continued convergence trade of, VIX staying low, could be below 14, and the VIX futures converging with them.
Yeah, I was catching my eye today as well as we were getting ready for the show. Intriguing opportunities there. Also intriguing stuff going on in the chat. You guys are distracting me with all your good comments and questions about financials and earnings and VIX puts. We'll get to all that fun in a little bit out there. I love when the chat distracts me with great stuff. But let's keep on rolling out to the land of VIX options. Today, not exactly the most robust of days from a volume perspective. Maybe VIX is kind of waiting like everyone else to see what the market grows up to be today. So far, we're still kind of treading water out there. And the treading water type of days, they usually don't really materialize in a ton of volume. That's the case right now. 374,000 contracts on the tape in VIX land right now. That's pretty weak. The ADV also looking lighter, 731,000 contracts going up a day in VIX. That's down another 28,000. Of course, we are in July, seasonally not the most robust period for volume anyway, so it's reasonable to expect some of that high, pushing 900,000 contract a day level to come in. And we have seen, of course, a lot of truncated holiday sessions over the last couple of weeks. That's going to hit volume as well. Be interesting to see now with Fed back on the horizon, CPI in the rearview mirror, how that impacts the numbers going forward. If you were waiting, listeners, if you thought this was the week where a put was somehow going to magically materialize in the top 10 in VIX land, then I would say maybe just turn off the show now and come back next week, because you're not going to get what you want. I'm joking, of course. Stay with us throughout the rest of the show. But yes, all top 10, all calls, all the time. Yet again, not a single put to be found anywhere, listeners. Read into that what you will. Cost you right now 196,000 contracts to break into the top 10 in VIX land. That's not nothing. There's a decent amount of OI open, 14.6 million. Again, we are heading into expiration soon, so we'll see a good chunk of that roll off the board. But threatening 15 million contracts open in VIX, that's a decent chunk as well. Again, cost you 196,000 to break into the top 10. They get you to the July 25s. Looks like we have an interesting cross-section of, shall we say, more relevant strikes out here this week, except for number 9, 197,000 of the SEP 45s. Those are interesting for a different reason. Number 8, 205 of the July 21s. Number 7, 242,000 of the AUG 20s. Number 6, 255,000 of the AUG 25s. Number 5, 258,000 of my favorite on the list, the AUG 60s. Number 4, 273,000 of the July 23s. Number 3, 289,000 of the July 20s. Number 2, 290,000 of the July 22s. And holding down the top spot yet again, listeners, 333,000 of the SEP 60s, part of that infamous 1x3 we talked about a while ago here. So yeah, dare I say it, outside of a couple of 60 and 45 strikes, mostly the strikes you would expect out here in VIX land, which is kind of interesting. Haven't seen that in a while. I might also expect a few puts, but hey, I don't want to be greedy. Beggars can't be choosers at the end of the day. Let's get on out to what's lighting it up. Like we said, not a ton lighting it up out there today. Only 374,000 contracts on the tape. It looks even worse if you take away the most active contract today. There's nearly 100,000 of the AUG 22s have gone up today. If you take that off the top, we're pretty much at about 250,000 contracts. So a really light day if you take away the biggest mover and shaker today. Right? Number 2 is a distant number 2, only 19,000 of the July 30s today. Number 3, 16,000 of the July 13 half puts. Number 4, 15,000 of the July 21 calls. And rounding out the top 5 on a pretty anemic day, 11,000 of the AUG 16s. Yesterday, looking a little bit more action-packed, 730,000 contracts on the tape. So pretty much exactly at the ADV, listeners. The big dog yesterday, 35,000 of the July 21s, followed by 34,000 of the July 14 puts. So maybe some A risk reversal type paper over there. Number 3, 31,000 of the July 15 puts. Number 4, 28,000 of the July 13 puts. And rounding out the top 5 yesterday, 25,000 of the Aug 15 puts. So it's interesting. The puts are clearly trading, just not enough to accrete enough OI to make it into our top 10, and have not done so for quite some time. Wednesday, obviously the banger day of the week. That's the day everybody was waiting for. 1.07 million contracts on the tape that day. 93,000 was your big dog that day. That gets you to the Aug 21s, followed by number 2, 60,000 of the July 25s. Number 3, 46,000 of the Aug 40s. Number 4, 44,000 of the July 21s. And rounding out the top 5 on a pretty banger Wednesday, 43,000 of the July 21 puts. So that 21 strike coming right into the crosshairs there. Tuesday, no slouch either. 804,000 contracts on the tape on Tuesday. 58,000 of the July 15 puts was your big dog on Tuesday, followed by 57,000 of the OC 40s and 55,000 of the OC 35s. Looks like some OC vertical action going up there. Number 4, 40,000 of the AUG 15 puts, and rounding out the top 5 on a pretty active Tuesday, 32,000 of the July 13 half puts. You might be saying, well, then how's the ADV coming in if we're having all these banger days? And then we get to Monday, listeners, only 345,000 contracts on the tape. The big dog, such as it was on Monday, 26,000 of the SEP 15 puts, followed by number 2, 19,000 of the July 15 puts. Number 3, 13,000 of the July 17 calls. Number 4, 12,000 of the OC doubles, the OC 55s. Always fun to see some of those interesting strikes sneaking in there. And number 5 on a pretty weak Monday, 12,000 of the AUG 23 calls. Joe, it's been an interesting week from a VIX volume perspective. Obviously, the big day is coming around and leading into, and indeed coming out of, that big CPI number on Wednesday. The rest of the week, including today, kind of light. Anything catching your eye out there in the land of VIX options this week, sir?
Yeah, I'd be looking at the August calls, just people looking into that, July Fed meeting coming up the 24th. So coming up at the end of the month, I should say, that would be interesting to see if people are betting on more hawkishness for the Fed, more driving vol higher. Other than that, I think it's just kind of business as usual, lighter volumes typical of summer months and lower volatility in general.
Mr. Meatball, same question for you, sir. What's catching your eye out there in an interesting kind of staccato week, business in the middle, not so much on the wing, sir?
Yeah, I mean, I'm with Joe. I think we've got this Fed meeting, but I think a lot of the Fed uncertainty has gone away. You got to get through earnings. Let's see what those look like. I mean, expectations are high, but we get through earnings, and it could be we could see some snoozing for quite a bit here, unless we start seeing a major shift in economic data.
Speaking of snoozing, let's get out to the vol ETPs out there. And certainly from an underlying movement perspective, they're not snoozing. Let's get out to SVIX first, our inverse friend. I could hear him yelping with shouts of glee out in the suburbs as SVIX continues to hit new highs. Of course, our buddy, Mr. Russell Rhodes there. That is his pretty much chief holding these days, hitting new highs all the time. Not quite at a new high right now, but pretty darn close. 28 3/4 right now, up about 1 3/4 points from last. I think it hit a new high recently, somewhere around 29.5. So everyone who is listening, who has been writing calls from 17 and above, I get you. I feel your pain. Obviously, you're still winning at the end of the day, but yeah, leaving some money on the table. I don't think anyone had a nearly 30 handle. I think I was mocking some 30 positions out there in SVIX. So intriguing stuff. In terms of volume, kind of a snooze fest, though. Only 500 contracts on the tape today, and the ADV is still hanging out around 2,000 contracts a day. Let's get out to the size position and see if there's anything of note. We talked about these before. The big position remains the July 8 puts. Spoiler alert, I don't think that strike's going to come into play by next week, but hey, crazier things have happened. Can you imagine what would be going on if SVIX got to 8 by expiration, listeners? What would be happening in the market? I shudder to think of it, listeners. And number 2, we have 2,100 of the AUG 9 puts. We talked about those recently. They actually got a decent level for those, which kind of surprised us here. So some people may be writing some lines in the sand in SVIX around the 8 and 9 level, in which case, yeah, I don't blame you. You can get decent levels for them. Go to town. And then the top 3, we have the SEP 35s, 1,100 of those, which again, that's what I was thinking of. Those are the ones that we mocked And then here we are at nearly a 29 now. So the SEP 35s, those people are laughing all the way to the bank right now, listeners. So intriguing stuff out there, even though today the volume kind of anemic. Joe, are you a big fan, a big watcher of the inverse vol space? And if so, what's catching your eye out there, sir?
Sure. I watched the whole ETN, ETP, ETF space. It's part of the reason why I do what I do. It's massive. It's massively affected by the contango. It's something I watch closely, and it affects my own VIX and spikes trading, which is I take the other side of it. But instead of taking a systematic roll from one to the next, I kind of dynamically look at what is cost effective to do. So yeah, I trade vol to the long side, but systematically, dynamically. So it is something that when I was in the VIX pit as a market maker, I paid very close attention to and just was marveled with the amount of money that went into these funds, the amount of money that was unfortunately lost in a lot of these funds, which I was happy to take the other side of at that time. Now here I am as a financial advisor, as a fund manager. Yeah, I'm using what I've been able to pick up to trade to the long side to take advantage of this. So yeah, I watch this daily. It's not surprising to see the SVIX do so well, given the dynamics. It's not surprising to see the run that it's had, especially just vol is down so much and it's just got that double tailwind for it. So kudos to anyone playing that to the long side.
Indeed. You mentioned you're slinging some spikes. Are you slinging some volume out there? You're looking at the options, the futures. What are you trading out in spikes land these days, sir?
I am trading futures. It's another option for me. Sorry, it's another future option for me. Just wherever I can get the best opportunity. It is very attractive fee wise. So I have the ability to trade either market depending on the conditions.
Interesting stuff. Obviously, we were big fans of spikes here on the show as well, waiting for them to really continue to accrete a little bit more volume, but intriguing stuff nonetheless. Mr. Meatball, what's catching your eye out there in the inverse space this week, sir?
Yeah, they went up and up and up. They seem to have kind of found, vol futures seem to have kind of found a spot that they're comfortable with for the next few days and weeks. I don't see a lot of easy upside there for the next couple of days. Again, this is the same thing. I don't really want to be short vol with what's going to happen the next week or two. So I'm looking to unwind short vol positions and long vol positions for that matter, and sit on my hands. And then here's what I'm hoping. I hope I'm right and we get that 5% downside and I can just scoop up a ton of SVIX. That's kind of my evil plan.
That would be nice. That would be nice indeed. Hey, speaking of letting go of some downside, really quickly, I saw this come through our chat. Was Nichols. Nichols wants to know, do you think I should close out my July VIX 13 puts, or puts on the 13 strike and below now, or let them run through next week? I know, Mr. Meatball, you were pretty heavy on that July 13 push strike. Are you still in there, or have you closed those out?
So I had a bunch of 15s that I closed, and I got the 13s for 6 cents.
Yeah, something crazy.
So I'm sitting on these in case I'm wrong, and we get a complete vol collapse, which is entirely plausible, into expiration next Friday or next Wednesday. So I'm going to hang on to these over the weekend, kind of see what Monday looks like, and then go from there. Because remember, we could see with what Joe said at the top of the show, vol and the underlyings are correlating. So we could see a little bit of selling early in the week and vol get absolutely smashed. That would be, some fun, some funness. So I'm just hanging on to these, keeping a tight eye. And if my 6 cents goes to 3, then I'll live minus my $600.
Yeah, they were always a bit of a scratcher. And at the outset, anyway, it wasn't like they were a robust position to manage. Interesting stuff out there, kind of like those. What were those? Those garbage 15 puts we bought a while back. I think we have a question about those too. Let's go out to get away from the inverse land and into the levered land, UVXY giving up the ghost hard this week at about a 17.5 right now, down about 1 3/4 points from where it was this time last week. Again, they're just taking all this vol out to the woodshed heading into the weekend, at least on these levered products. VIX, like we said, seems to have found a floor around 13.5, but we'll see if that holds for the rest of the day. So far, volume-wise, UVXY looking all right, closing in on half of its ADV. It's about 41,000 contracts right now. The ADV is 90,000. That's moving in the wrong direction. That's down 32,000 contracts from this time last week. So if the goal of the reverse split was to try to gin up some volume in UVXY, it ain't working, listeners. So we'll see. Again, maybe part of the reason is that there was such an anemic reverse split. Everyone wanted more. Obviously, we're in a seasonally rough time for volume as well. So that's certainly playing a role. But I think a little bit better reverse split could have also helped with that. In terms of size positions out there in UVXY, the big dog, again, the H strike. People have this H strike on the brain across products. The big position in UVXY right now, 28,000 of the SEP8 calls. Interesting stuff. If you overwrite those, I'm sorry. And if you're long those, then hey, a ballyhoo to you, followed by 27,000 of the Jan doubles. So there's all sorts of nonsense open in UVXY right now, listeners. And then keeping things on the levered side, UVIX as well, 410, down 0.6 point. What can you do with a 4 handle at this point? They need to reverse split this thing. The volume reflecting that as well. Only 3,600 contracts on the tape. The ADV is 8,300. Down about 700 contracts. So that one also moving in the wrong direction out there. Mr. Joe, anything catching your eye in the levered side this week? Either your UVXYs or your UVIXs, sir?
No, other than it is the week before expiration. It's the worst week of the month for all these ETFs that are long, especially bad for the levered. And then the week after is the next worst because the front month's so far away from the spot now. So yeah, it just really is. It just really has a big headwind right now. You're seeing that roll widen out. We're almost at $2 now. It's a huge percentage. So there's a big headwind on this trade, and yeah, I'm not surprised to see it get crushed. And it's something that I used to trade, in the early teens. I used to really enjoy trading that to the short side, but I've since matured and gone back to a long vol position, long vol trader.
You grew up and got away from those.
Matured, or maybe just lost more hair. I guess I'm not sure which right way to say it.
Mr. Meatball, anything catching your eye out there in the land of your beloved UVIX and UVXY, sir?
Yeah, they really were getting taken out of the woodshed middle of the day yesterday, and then the worm turned on vol, and they've since touching their lows, they've been pretty solidly not dropping the way we the short vol traders would hope. That's partially because of, I think, the way that things kind of squeezed the second half of the day yesterday and continued into this morning. We get a little bit of softness that's controlled over the next couple of days, and vol could really take it on the chin.
Indeed, as we keep on rolling, listeners, out to a product that took it on the chin a lot last year, including from myself. I said I washed my hands of this thing, and now here we are. It's actually doing what it's supposed to again, so I am, again, mildly intrigued. I know the Meatball's been back into this one for a while. This is good old VXX at about a 24, down 1 3/4 points. We were talking about this on Options Bootcamp this week. People are asking us, is VXX kind of back? They didn't even know. So yeah, it kind of is, listeners. Again, you should always keep one eye on it, and don't bet the house, the college fund on this one, because this thing, again, like all these Franken products, can go haywire at the drop of a hat with nothing else going on in the market. The issuer can lose their minds again. So bear that in mind. But with that caveat in place, VXX, I should say, at about 24, down 1 3/4 points. So again, giving up a lot of the ghost this week. Volume-wise, 25,000 contracts. So looking kind of light today. The ADV is 68,000. It's actually ticked up about 1,000 in the right direction. So interesting stuff out there. Looks what happens when your product does what it's supposed to do. People will actually trade the options on it. In terms of size positions, we have 27,000 of the AUG 22 puts, followed by 21,000 of the July 40 calls. Interesting top positions out here in these products. They're kind of all over the place. Joe, I think for a lot of us, we washed our hands of VXX last year. It seems like Barclays is trying to get itself back into our good graces. Is this a product that you're watching and playing with again, or have you washed your hands of it completely? Once bitten, twice shy.
You're just reminding. I think when we talked, it was shortly after that decoupling. So it is. What a year it's been for VXX. I don't follow it as much as I used to. I think it looks to me like it's trading a lot more like it should, which of course is not great for those that are long it. But it's something that I watch still. I still watch it because the volume is big. The volume affects the futures, which I trade very actively, and the role is crucial to all that. So it's all part of my daily repertoire, checking in on these things. So yeah, it is interesting. It is a big headwind on here, I guess it's trading a lot better, but for me, it's still not quite there from where I would want to be to get into it.
That's why it's still on the show. It's in everyone's repertoire or watch list still, that watches vol here. So we kind of have to talk about it. We're legally obligated. Mr. Meatball, I know you've been playing a lot of downside in VXX, sir. How's that going for you?
Yeah, I'm currently out of it, but again, that is going to be something I play in the coming days and weeks. Like I know I sound like a broken record, but I'm really hoping that mechanically we get a crazy sell-off and I can jump on board.
Reset all these
babies for you. I don't know if that's going to happen, but there's or even we get a big vol pop into this because people are kind of scared about what's going to happen. That's going to be an opportunity to dive in here. So I'm keeping a tight eye, a tight lid, a tight watch, my eagle eye, if you will, on these vol ETPs because if we do get a little bit of a lift with especially after July rolls off, with August being that front month future. August gets a little bit of a pop, and then VIX comes back down to earth. It could be a bloodbath for volatility the week of the 24th.
We all know what you're looking for. You want a little vol pop so all these little products can reset and you can dive right on into the downside.
100%.
That's all you're looking for. 100%. We know you. We know what you're up to here, Mr. Meatball. Listeners, are you up to a little bit of vol trading on the earnings front? Because you got some. It's back again, listeners. We had Delta before the bell yesterday, PepsiCo. Today, of course, is kind of the unofficial real kickoff to earnings season with a lot of the big financials, JP Morgan, Chase, Citi, Wells Fargo, all popping off. A lot of them doing maybe a little bit better than some folks expected, especially back in March when everyone was wringing their hands over contagion fears. I was looking in some of the chat earlier. We had Options Queen talking about how the banking side was impacting her vol prognostication for this week. She was fading these financials, thinking vol was going to be a little bit higher. So far, that's not the case. Z2313 says he was really worried about the banking credit side last night, but it turned out to be at least okay. The consumer side is amazingly resilient, though, keeping on pushing out the dates, if any possible, of recession. But the lagging effect of rate hikes will bite, but only when. Hopefully, we'll all do fine with our trades. Yeah, I think you can still have an open question about the smaller side of the financial sector, but a lot to unpack. We're looking forward to new earnings move results, earnings trades, earnings seasons data, all updated for the new cycle, listeners, coming at you pretty soon, probably next week. Before we roll into some of the questions, Joe, over there at Equity Armors, are you guys big watchers of earnings season and anything catching your eye, anything on your radar right now, sir?
Yeah, we're eagerly awaiting it. The banks, we're not really big into the banks right now. We're kind of heavily underweight banks right now. So maybe looking past this first week, I think when we get into the big tech names, that's going to really tell the story. I wanted to jump in, though, on the last segment, just talk real quickly about these VXX and UVXY real quick, if I can.
No, not at all. We're done. We're past it. I'm just kidding.
It might be another year till I'm on the show again. So let me jump in. I think by now everybody knows that these are not buy and hold strategies, and I think people understand what they do. Is that they do track vol. It's not something to buy and hold, but I think if you're going to trade it to the long side, which is what I do, there has to be a strategy. There has to be a plan in place. What is going to happen if my volatility goes in my fashion? For me, I trade volatility and I'm long equities. What my expectation is, if my equities go higher, I'm okay in losing some of my long volatility. What my expectation is, my equities go lower, hey, I'm going to make some on my long volatility. And I have to plan for that. The plan isn't just to wait and let it all come back. The plan for me is when volatility goes higher, sell it out, buy more stocks, because guess what? They're lower. So for me, it has to be, you can't just trade this alongside being like, oh, I hope tomorrow is the day of the crash. I don't think that's the right way to think about this thing. Maybe some people like it, but for me, there has to be a plan. There has to be some sort of strategy. It can't just be a wing in it, like, oh, I'm expecting the market to drop 10% in the next quarter. So that's how I do it. And you have to have the strategy, what you're going to do when the event happens. In my career, I've been short VXX. The thing about VIX futures is you can't really be long them. You can't really be short them. So it really takes a very active trade to do it.
Speaking of active, our listeners are very active. Let's get to some of you folks now. A little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Let's get back out to our chat really quickly, because all you live folks take precedence, as always, listeners. And we have Frank coming in. Frank 1209 says, I've been fading financials for a bit now heading into earnings season. I agree that some of the smaller names may not fare as well as the big ones. Yeah, that's kind of the open question, right? The contagion fear. It seems like maybe we're past some of that, but we don't know all the behind the scenes details going on out there in the books of some of these smaller financial names. So certainly a question mark potentially still there. Options Queen, a lot of others debating where VIX will be for now. I don't want to see too much of that, because I don't want that to color my crystal ball in a few minutes, listeners, even though Z2X, I can't hard time saying that, Z2313 says, I still think VIX will be range bound if there are no big surprises in earnings. I think the Chinese government may actually really do something to stimulate the economy this time. Well, I suppose we shall see. Speaking of what you folks have on your brains, listeners, our question of the week this week hits home for this show. We asked you, hey, the last time VIX hit 12 back in 2017, actually it wasn't the last time. The last time was in July of 2020. We all know what happened, January, I should say, of 2020. We all know what happened after that. Let's not go back there. But when VIX hit 12 back in 2017, it kicked off a dark period for the options market. Will we see a repeat this year with lower vol leading to lower volume in the second half of 2023? Gave you two choices. Yes, low VIX kills volume, or no, 0 day will save us. Mr. Joe, we'll start with you as our guest, sir. What are you feeling? You think this lower vol level we're at right now, is that going to weigh on the overall options market, or do you think the new products like 0 day will be enough to offset it, sir?
Well, the 0 day will help a little bit. There definitely is more option volume around the whole ecosystem. So yeah, that'll help on the margins. For me, it's just all tied in together. We're in a low volatility seasonality part of the year. That's why the VIX is low, but that also means that there's low options trading on the VIX. So it's just all together. So yeah, I do think low volatility does tend to lead towards lower options volumes. But the thing about volatility is that it is mean reverting, and it has a tendency to snap back from a low volatility period to wherever the mean is, which right now, actually, be surprised to know it's over 20.
Mr. Meatball, same question for you, sir. Where are you fading? Are you fading the second half of the year from a volume perspective, or you think we can hang in there? Are you a yes or a no?
I think that we could see things I think we got a little ahead of ourselves. You could have a little bit of a time correction where maybe things don't go crazy, right? There's two forms of correction. One is, actually selling off. One is sitting here and letting multiples catch up. Maybe you see some of that if we don't get some selling, which makes total sense to me.
All right, let's keep on rolling here. We have from our episode 539, Vanishing VIX is making us nervous. We have a comment from Seth Hickel, CMT. He says he's a portfolio manager out there. He says, I listened to this while mowing my yard yesterday. Great stuff. That's what we're going for. We're going for the niche audience of portfolio managers and vol traders who are busy doing yard work. That's the audience we're going for. So glad to hear you enjoyed it out there, Seth. I just envision people mowing their lawn and listening to vol views. If that's the case, I probably should speak up. I'm already pretty loud, but lawnmower, pretty loud to talk over there, listeners. As we keep on rolling, Christopher had a question. Christopher wants to know, can you please tell me what those 7-cent contracts were being traded under? Was it VXX, SVIX? Thanks. Those were our now legendary July 15 puts that we bought at the end of last year, listeners. Actually, I think it was October of last year. We pennied that person. We saw 100,000 of them go up. All the sagas played out on the show many times. We had fun with it, buying a whole bunch of them for better price. And they paid like 8 or 9 cents. We said, that's ridiculous. You can do better. So it was more just an exercise in better execution than anything. I got a bunch for 7. I think Mr. Meatball did too. And they ended up going out for nearly $1. So it was a ridiculous trade. I had personally forgotten about them. You do so many trades here, you put them in the book, especially these little kind of silly ones. And let alone, they just kind of exploded out of nowhere. So yes, those were VIX July 15 puts. Mr. Christopher, I don't think the ones, what was it, Nichols was talking, the July 13, or those are not July, those are June. I misspoke. Those were June 15 puts. I don't think the July 13s that Nichols was talking, I don't think they're going to fare the same, but hey, crazier things have happened. Also got a lot of people commenting on the show this week. You got Gambler chiming in saying, he was talking when Russell was on, saying he's so upset over his SVIX shares getting called away at 17. Don't know what I was thinking. He also chimed in that those SVIX SEP 35s, yeah, that's what I was talking about, don't look so ridiculous now. I remember laughing when you brought them up on Volatility Views, but whoever bought those may end up getting the last laugh. Yes, I kind of had a chuckle at them as well, Gambler, and now here they are. Maybe they will have the last laugh. And I feel your pain on overwriting, I should say, a lower level in SVIX. I think a lot of people are in your boat. We've heard from a lot of people, Gambler, who have the exact same complaint. 17 was a key level. When it hit 17, a lot of people got excited about that and sold calls there. So you're not alone by any means. It's certainly by 20. Very few people outside of the once and future Dr. VIX. I know he's been writing calls all the way up as well. So he may not have as much left as we think. But either way, very few people, I think, have ridden SVIX all the way up. So I don't think you're alone out there, Gambler, even though I do feel your pain. Looks like we have some more meaty questions, but we got to get on into it, listeners. We got to keep on rolling. It's time for the most difficult. It's time for the most dangerous part of the show. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we attempt to wrestle with the vol gods, see what they have in store for us. And man, I am close. I was at a 13 quarter this week. We are at just about to break into that range. I'm sure if I wait 5 minutes, well, probably not even 2 minutes. We're at about 1340 when we kicked off this segment. So 0.15 away. I don't know. That's pretty darn close. We'll have to see by the end of the show if I can kiss. If I kiss a 1335, then I get the bullseye for this week, listeners. Mr. Rock Lobster was on with me last week. He was at nearly 14, 1395, so no joy for him. Looking at a bunch of your guesses from the chat, I see a lot of 14 handles, some 17 handle. Nichols, wow, you were feeling the juice this week, and a whole bunch of others in there. I'll have our producers go through all of them. Long way around. Looks like I'm the closest to the bullseye this week. But let's see. I'm going to keep an eye on mine. Joe, you get the dubious honor of going first, sir. What are you feeling for vol this time next week?
1 week from today. Oh, boy, this is a great question. I think it'll be higher. I think, we'll be heading into a week before the Fed meeting. I'm going to say 1505.
Interesting. Getting a little bit of that old juice back. Mr. Meatball, same question for you, sir. What are you feeling this time next week?
I'm kind of with Joe. I think vol's going to be higher. I think that, let's see, 1505. That's no good. Can't do 1505. Where's the silliness in that? I'm going to go with 1661.
Yes, the quality palindromic nonsense we have come to expect from the meatball. Is this going to be the weird week, listeners, where I am the lowest man on the totem pole here on the vol front? Usually it's the other way. Usually I'm playing the upside. I was a little lower last week as well, so maybe a couple weeks in a row. But yeah, I'm feeling, I think, a little bit more juice. I don't know if I'm as optimistic as these fellows here, though. I'm going to say a good 14 double, a good 1455. So that's your vol market for next week, listeners. Meatball on the upside, 1661. I'm on the dark side at 14 double. And Joe kind of in the Goldilocks seat at 1505. All right, everybody. That music's going to do it for us here on the Volatility Views show. It's also going to do it for our broadcast week for you on-demand folks. If you're on the pro side, hang out in the chat. We'll be back in a little bit with options oddities to break down all the crazy week that was from an unusual activity perspective. If you haven't joined the pro yet, theoptionsinsider.com/pro. Get in there now so you can join oddities. If you're on the on-demand side, it'll be too late for this week, but you can join us next week and all sorts of other fun ensuing. And before we go, let's go around the horn. Mr. Joe, we'll start with you, sir. Anything else you want to leave our audience with that you keep an eye on in the vol space now? Maybe something we didn't have a chance to touch on the show. And then B, where should folks go if they want to learn more about Equity Armor?
Thank you. Yeah. I think the key points are, being a contrarian usually means that, when volatility is lower, you're expecting it to go higher. Another thing people need to remember about being a contrarian is you don't usually know exactly when that tipping point's going to be. Sometimes it takes a lot longer than when you expect it to happen. So just having a long-term strategy ready for all outcomes is the appropriate stance for me. And everyone can go to equityarmorinvestments.com. Check us out. You can check out my blog. A couple times a week will be posted on, and subscribe to that if you liked what you heard today, or if you want to hear more.
There you go, Joe. I'll look forward to talking to you in about a year and a half from now as well.
Awesome.
I'm just kidding.
I'll put it on my calendar.
We'll get you rotated in sooner than that. A little bit happened in the world of vol, so we need to check in more frequently than that. And Mr. Meatball, if folks want to check in on the vol space with you, sir, and everything you got cooking, where should they go? What should they do?
Yeah, just go to optionpit.com and check out the VIX Edge. I'm writing on volatility just about every day, giving you some analysis and helping you take advantage of these crazy vol markets.
Bam, 1335, just hit it. I knew if I waited 5 minutes, I would get there. So there we go. That puts me exactly within our 10th of a point range. So I will take a winner chicken dinner. Listeners, if this show has taught me nothing over the last decade, it is take your victories early and often. And I will take that one. They're getting challenging. Even though these days, VIX in this lower level should be a little bit easier statistically to hit the bullseye than it was when we were whipsawing around 27 to 30. But intriguing stuff nonetheless. I will say it is to our credit, even in all that madness of the pandemic, we never increased our margin of victory. You always had to be within a 10th of a point. That's how committed to the cause we are here on Volatility Views. Unfortunately, that will do it for us on the on-demand side. Hope all of you had a great time with us, a safe, a profitable week out there. Go out there, get away from your screens, see some friends and family. We'll see you back here on Monday for the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.